So Dogecoin might be on the verge of a breakout and almost nobody is paying attention. While Bitcoin quietly holds above $73,000, Dogecoin just saw a 176% explosive increase in active addresses. Whales are accumulating, derivatives volumes are spiking, and the price is sitting right below a key psychological level. But here's the twist. At the exact same time, institutional money is flowing into Ethereum and select altcoins, while largely ignoring the rest of the market. So today we're breaking down why Dogecoin activity is suddenly exploding, the key level that could trigger a massive move, what institutions are really doing with altcoins right now, and why Ethereum and Solana are still leading, and whether an altcoin season is actually starting or not. So let's get into it. Let's start with the headline story. Dogecoin is showing signs of life again. Over the past 24 to 48 hours, Dogecoin has been hovering around the 10-cent mark, with a recent push higher of around 5%, in line with what Bitcoin's been doing. But price isn't the most important signal here, activity is. According to recent data, Dogecoin active addresses surged by 176% in just 1 week, and that is not normal behavior. That kind of spike usually signals one of two things: new users entering the network or large players positioning ahead of a big move. And this is where things get a bit more interesting, because historically, Dogecoin tends to move after activity spikes, not before. So what you're seeing right now could be an early stage positioning. But there is more. Trading volume has surged significantly, and derivatives markets are playing a major role. Recent analysis shows Dogecoin volume jumping close to 1 billion, driven largely by leverage positions and whale accumulation. So in simple terms, big players are making bets, and they're doing it right below a key level. Right now, everything comes down to one price: 10 cents. This is the psychological resistance Dogecoin has been testing repeatedly recently. It's been rejected multiple times over the past few weeks, since Bitcoin has been accumulating in a very similar correlated fashion. And the markets remember that. Analysts are now calling this a make or break zone, where Dogecoin could either break out towards 11 or 12 cents, maybe even upwards towards 15 or 20 cents if Bitcoin gets some momentum, or it could reject and fall back down into the resistance area that we've been in for a while and just continue to accumulate. Some forecasts suggest that if Dogecoin clears this level with volume, it could trigger a fast move higher, in line with Bitcoin, potentially even a parabolic rally phase. But here's the catch. Momentum is still mixed. Technical indicators recently showed oversold conditions even as price held near that 9-cent support. So what does this all mean? It means the market is coiling, and when the market coils like this, they tend to move fast once a direction is confirmed. But Dogecoin doesn't move in isolation, and this is where the broader altcoin market comes in. If you've been waiting for a full-blown altcoin season for this whole cycle like I have, you might need to be a bit more patient, because right now, the data shows something very different. Altcoins are moving, yes, but the gains are highly selective. Ethereum is holding around $2,200, while the broader market has seen moderate upside over the past day or so. But at the same time, Solana has seen renewed institutional interest, XRP activity is rising, and Dogecoin is gaining retail and derivative momentum. But here's the key point. Institutions are not buying everything. In fact, recent ETF inflow data shows the capital is still heavily concentrated in Bitcoin and Ethereum, with only limited flows into altcoins like Solana and XRP, and almost none into smaller assets like Dogecoin. Even when altcoin ETFs do see inflows, they're still relatively small. For example, recent data showed that 23 million combined inflows into Solana and XRP products happened, just a fraction of the 600 or 700 million, just a fraction of the inflows that we've seen for Bitcoin ETFs over the past week. So what does this mean? We're not in a full alt season yet. We're in what some analysts call a selective rotation phase, and that's a very different market environment right now. While meme coins like Dogecoin are driven by momentum, Ethereum and Solana are being driven by something else: infrastructure. Institutional demand for Ethereum continues to grow, especially with the introduction of new products like staking-enabled ETFs, and at the same time, Solana is quietly building some momentum again under $100. Recent reports show hundreds of millions of dollars in institutional exposure flowing into Solana-related products, with ongoing upgrades improving network performance. And this is really important because it highlights a split in the market. On the one side, Ethereum and Solana have infrastructure and institutional adoption. On the other, Dogecoin has sentiment, speculation, and a big community. Now here's where things get a bit more interesting again, because historically, both of these sectors can rally, but not always at the same time. Right now, we may be in the early stages of capital rotating between them. Even with all this altcoin activity, macro is still in control, of course. Right now, the entire crypto market is reacting to interest rate expectations, that geopolitical tensions in Iran, and liquidity conditions. We recently saw altcoins like ETH, SOL, and XRP jump at geopolitical tensions easing, highlighting just how sensitive crypto can be to these global events. But at the same time, the broader market is waiting for clearer signals from central banks. And here's the key takeaway. When liquidity increases, altcoins tend to outperform. When liquidity tightens, capital flows back into Bitcoin as a safe haven. So the big question right now is, are we about to enter a risk-on environment? Because if we are, that's when assets like Dogecoin typically move the most. So let's bring this back to Dogecoin then, because there's a deeper signal here that most people are missing. Dogecoin is often dismissed as just a meme coin, but historically, it plays a very significant role in the market cycle. It's a high beta asset, meaning it underperforms during uncertainty, but massively outperforms during hype cycles. And right now, we're seeing early signs of rising network activity, increased leverage, and whale accumulation again. And that combination tends to be rare. It usually shows up before major retail-driven rallies. But here is the reality check. Meme coins are also extremely volatile. They depend heavily on social sentiment, narrative momentum, and attention cycles, which means the upside can be explosive, but the downside can be just as fast. So where does this leave us? Right now, crypto is in a transitional phase. Bitcoin is holding strong and accumulating, and the rest of the market is following suit. Ethereum is attracting institutions with its staking ETF potential. Altcoins are waking up, but selectively. Dogecoin, it's sitting right at a critical level. If Dogecoin breaks past that 10-cent level with strong volume, we could see a rapid move up towards 15 or 20 cents pretty soon. But if it fails, we're likely heading back into consolidation. If we zoom out, the three key signals will determine what happens next. Macro liquidity, are we entering that risk-on phase that we talked about? Institutional inflows, do altcoins start attracting more serious capital, or will they remain relatively small compared to Bitcoin? And retail sentiment, of course, does hype return to the market? If all three of these align, then what we get next might be quite explosive, and historically, that's when Dogecoin moves the most. So the real question is this the beginning of the next altcoin wave, or just another fake out before Bitcoin takes control again? Let me know what you think down in the comments below. And if you want more daily crypto videos like this, make sure you subscribe, because the market is about to do something very interesting. Check out the video on screen next, and I will catch you in the next video. Thanks.